Yo, what up, everyone? I've been getting a lot of DMs asking if the market's crashing. Do I think we're going to keep moving lower and see more blood? I'm going to answer these questions in this video as there's some really valuable lessons that we could take solely out of today's action about the market sell-off. We're going to get into every one of these and we're going to refer each one back to the charts. And I'm also going to get into some trades that I took and some trades that we took in my Discord community. Before we get into it though, I'm going to link my Instagram in the description below. If you haven't already, I recommend following this at InvestaTrade. I post daily trading recaps on here, along with very good trading tips and tricks that you're not going to really find anywhere else. Link is in the description below. You're definitely missing out if you're not following it. But now let's get right into the lessons. First lesson I want to get into is we have to read the market's context. I stress this so much, and it's very important on a day like today or any other trading day. The market, bigger picture, we have to read the context as it bleeds into intraday as new clues are constantly forming. The market's constantly throwing different things at us. We have to read these clues and we have to trade accordingly. And on a day like today, it's extremely important because we haven't seen this action in quite a while. Now, I want to go over the pre-market plan. I post these every single day in the Discord of the setups I'm watching. This is going to give me my context overall and the levels that I'm watching intraday that we planned for. So we had supply that we were creating at 152.39 and 151.51 on NQ, and I trade QQQ options off of this chart. We also had demand. I did not expect it to be reliable today if sellers are aggressive. We also had demand a little lower. If buyers don't show up, we get below 15,000. We could see more selling into demand lower where we could capitalize on puts. Now in the webinar yesterday, we do webinars every Sunday. I said if rallies fail at demand, we have to flip the switch and we could play puts as long as sellers are putting pressure on weak buyers. Now that's on NQ. And today we saw very weak buying and we saw very aggressive selling on a very heavy volume day. So if we were to pull up this chart, this is a 1 minute chart, we had 832,000 lots on NQ compared to a daily average of 490,000. That is almost double of the average daily volume traded. Now, overnight, or actually just to get an overall sense of the context, let's pull up this chart. So the past couple days, the past week and a half, 2 weeks, we've been seeing very aggressive sellers enter the market. And you have to imagine that this rally back in mid-August created demand on the way up as we were moving up. And last 2 weeks, those demand zones that formed got destroyed because we saw very aggressive selling and very weak buying. How do I know this? We kept putting in lower lows, kept putting in lower highs. We rejected supply every single day last week, and today, and actually invalidated new demand that formed last week as well. So very heavy sellers at supply. And in the webinar last night, I want to pull up this action here. Before we obviously saw the sell-off, I wanted to play puts today intraday below this 15260 zone, targeting the demand a little lower. Unfortunately, we woke up and the market was already down tremendously, and that invalidated our plan. Although it worked, we just couldn't capitalize on it intraday. So we're below this demand zone. These become invalid. Now the market opens up, and we're going to translate this to SPY and QQQ as well because these charts are kind of identical and the context is the same. And we had a very strong rally right out the gates for about 100 or so points where we top ticked this supply zone and rejected at 15151. So this goes into SPY, this goes into QQQ, this goes to any other equity as well. If we're talking about Apple, Amazon, Tesla, when the market has the context like last week where we aggressively sold off and sellers are factored into the market, for those sellers to close their position, they have to cover. When sellers cover, they are technically buyers in the market, which is why technically every seller is actually a buyer. So when they cover, they have to buy, and the market can move up on those short coverings. It's a short covering rally. However, if there aren't any new buyers entering the market, then the trend cannot sustain to the upside strictly on shorts covering. We need to see new buyers in the market. We need to see demand form, and we need the market to show intention to the upside. Now, the same applies to ES. Let me pull up the ES plan. Pull this up here. ES, SPY, same levels for today. Same principles apply. If weak buying and heavy selling at demand, we're going to look to capitalize on puts. If buyers show up at demand, it's valid to scalp long, smaller size. We had supply above and we had demand below. We were watching for a break below 4321 and aggressive selling to bring us below 4300. Remember that, because that's going to be a trade that I took later on in the day. Okay. So that's ES context, and the same exact things happened. Now, this is going to bring me into my next point about having no bias and trading the chart. A lot of people woke up, they had a bearish bias, it worked out, it's totally fine. If you trade the facts on that context, you don't have a bias, but you're just reacting to what the market is, giving you on the chart. You have to trade the chart. You can't trade just because you see something going down or something going up. You need to enter every single trade that you put on with facts and not based off of your opinions. So NQ rejected the supply. In the intraday commentary tab, where I basically just update my thought process throughout the day, I said the 15151 NQ supply at 9:48 a.m. should set the tone for the next context. If this pullback holds or create demands here, its higher prices will be explored. If this pullback fails and supply rejects, market could head lower. Same thing with ES supply. I'm going to be using this to gauge the next direction in the market. So like I mentioned earlier, it's constantly giving us new development and new structure as the day is moving forward. You have to be able to read that and react, put the pieces together. And when you put the pieces together, that's when you come up with your trading plan. And that's when you enter the market, calls or puts, it really doesn't matter. So now we go over ES. I know this is a lot, but I want to get into my trade. So I was watching SPY and that short covering rally, like I said earlier. The market aggressively moved up on SPY, and I took calls at 9:32 when it looked like this. Now, the one error here is we had supply, NQ was rallying, but I really ignored this ES supply, and I thought we were going to continue moving higher with a faster rally of shorts covering because I knew a lot of retail was at the open. I'm buying puts all day long. So I wanted a bigger move. We never got that. We're hanging out near the lows. And at this candle at 9:38, I stopped out of my position. My stop was, honestly, did not have a clear stop in mind. I was going to use this high as a stop, but I didn't like how we were at supply. I realized these facts after I was in the trade, and it really wasn't the best execution on my part. And I took a loss on this, and it sucks seeing it rally after, and I definitely would have took profits on that. So I started the day with the loss on SPY calls. No big deal. Now, at this point in the intraday commentary tab, I saw a very heavy seller coming into the market right here at right here actually, at 4355. And now we have a seller built into the market. It looked like it was absorption at first because the reaction out of it was up, but we failed to make a new trend. And then eventually that seller showed effort, and then he got rewarded to the downside as the market kept moving lower. Now at this point, I'm watching NQ because at that point, as this is all going on, NQ was rejecting supply and we started moving lower. So at 9:50, I played puts on QQQ. It looked like this. So I didn't get an entry at supply. It's very hard to time that. And then we started moving down. 9:50, I got my puts. My stop was above 15140. It was a very tight stop. We broke this trend. We rejected supply. ES was failing. ES had a heavy seller come into the market. And then we started moving down. And at 10:11, we looked like this. As soon as we were stalling out inside of this demand zone, I got out my full position. Yes, I missed out on a lot of profits, which sucks, but I followed my plan. I traded the chart, I got my entry signal, and I took my profits as soon as we were in this demand zone because who knows, we're going to keep selling off. The market's at a demand imbalance. We very can well rally to the upside. No one knows. We just put our risk on and we respect it. So that's going on. The next point I want to make, I know we're jumping back and forth, but there's just a lot of action and there's a lot of thoughts that go through my head as the market's developing. I got a lot of messages by end of the day, like, how did you trade this? How would you trade such a market sell-off? And the way I look at this is you cannot have FOMO. A lot of people enter positions because, like I said earlier, they think something's going up or they think something's going down, or they see the market selling off 800 points and they're like, I want to capitalize on this. I want to make some money. And they enter blindly, randomly, and they're trading off of their emotions. So I have to say this. If you missed your entry or you're not comfortable trading these tougher conditions, simply don't trade. Sit on the sidelines, record your screen, journal some hypothetical trades you could have taken. Look to improve if you're not comfortable putting real skin in the game, because you have to identify your setups. This action that we saw has been different compared to what we have been seeing the past month, even the past year. This is the first type of real blood that we have been seeing where supply has been rejecting every single day and demand zones really haven't been reliable at all because of that aggressive selling. So you have to figure out what your setups are, trade your setups, because those are going to be the ones that make you money. If you're attached to the money, how much you could have made, how much you should have made, like right away, this NQ trade made up for that SPY loss. And yes, I could have probably doubled or tripled my position profit-wise if I held for this, but I followed my plan and I didn't look at how much I could have made or should have made. That's the wrong mindset, and that's when you enter trades where you hesitate, you have fear losing, and you put trades on because you're broken from the past, so much pain because you don't respect your plan and you don't respect your risk. So without taking up too much time, the market was selling off. This is what I mean by weak buying. Every time we come into demand and fail, that's a sign of weak buyers. And with such heavy volume on NQ, even yesterday, look at that, 2.6 million lots compared to a daily average of 1.3. That's double its daily average. When we have such a weak context, this demand is not going to be very reliable. After seeing so many zones overnight, so many zones on Friday fail, and so many zones intraday fail, there's no reason to play the market long, especially with rallies failing. That's telling me buyers are not showing any effort to the upside. That's in itself a major sign of weakness, and we kept moving lower and lower. So my next trade on SPY was at 1041. Looked like this. So what I saw here was somewhat of support forming near the low. Just like this. Now, also, there's tons of different ways you could enter and exit the market intraday. You have to figure out what works for you. I know what works for me the best. So I saw this double bottom. I saw the market move up. And just like we saw all last week at demand, we tag it temporarily. We start moving up. Everybody thinks we're going to start bouncing at this zone. But this is just a trap for retail to get long. And this rally fails from those weak buyers. We never created demand at all. We just moved up. And then this market started heading down. So at 1041, I played puts. Stop was at this high right here, around 4359. And I was anticipating just a quick break below the low. And I'm going to get out. At 11:02, I got out. I was hanging out in this trade. As soon as we broke below it, got out my full position. We bounced at it. And then continued moving lower with that such weak buyers and aggressive selling context, as all these demand zones completely got invalidated. Now at this point, I walked away from my office to grab lunch. These are what I call FOMO hours. Now, if you remember from the pre-market plan, I said that I wanted a break below 4321, targeting 4300 and then below that. I did not play the first break because I was not at my office. I probably would have played this break, honestly, and I probably would have taken a loss on it. But we were so extended to the downside, you have to ask yourself, does it make sense from a risk to reward standpoint without a rally failing to play such an extended move to the downside? Which is why I like playing rallies that fail, because of its context, and it gives me defined risk, if that makes sense. So at 207, just like this, what I was anticipating here, I actually traded a very, very similar setup last week, which kind of influenced this setup this week, which is a good thing because what happens in the past might happen again in the future as long as you don't let your emotions get involved. So I took this short. I was risking a little too much if my stop was at this high at 4330. This was a type of trade where it had to work out right away, and we started selling off. And at this point, my entry is all the way up here on SPY puts. My stop is at the high. I was anticipating a break below this and a potential bounce. But if I'm in this trade and my entry is so much higher than where the market's currently at with such the weak context, you could keep riding this trade until your profit hits. As this rally failed on a 1 minute, this didn't even have a rally. And as soon as we got to 4,300, I got out 237, and 4,300 bounced temporarily, but kept selling off. And then we got that end of day buy program, probably by the algos to move us up. And in a half hour, the market opened, we pretty much wiped out 75% of the sell-off that lasted 5 hours, 5.5 hours. So pretty crazy action. I just want to leave you that, understand the context. Demand zones don't mean the market's going to bounce. You have to add the pieces of the puzzle together. One piece is we have demand, but if the other pieces outweigh that piece of demand with such heavy selling, then it's not really respectable to this demand zone. And if you trade equities, notice how I didn't really go over any equities, is because the equities, Amazon, AMD, Tesla, they're going to do whatever the market's doing. So if you want to long something off demand, you better make sure the market's, bouncing off demand with it, or else we're going to continuously sell off on the equities that make up the market. So I hope this video made sense. I threw it along. I really didn't plan on making a video, but there were definitely a lot of action to go over and a lot of different setups you could have traded, a lot of setups that you probably could have got screwed on, taking a big loss if you're not mentally prepared. So I recommend everyone to put this in the journal, take a picture of the charts, review it, review your trades you could have did, review your trades that you did do, log it, as this is definitely a different action than what we have been seeing. So if you're a new trader, now you got more ammo for your arsenal to put in your book to review. And if you see this type of similar action, which this was very, very similar to action we saw back in March when COVID was selling off with all those demand zones that we had from the previous extreme bull run. This is this very similar action on a smaller scale. Obviously not limit downing, but just recognize different conditions, understand the context, don't trade off your emotions. And yeah, I'm going to leave you all off on that. But if you enjoyed this, drop a thumbs up, subscribe to my channel, and if you really want to learn more, check out the links in the description below. I offer a very in-depth and educational course that comes with access to the Discord at no extra cost. But besides that, I'm ending it. Peace out.